Ready for another deep dive? We've got a lot to uncover today, from those market swings to tech's resilience and even a venture into oil and crypto.
Buckle up.
Yeah, exactly.
It's going to be a wild ride.
So let's jump right in, starting with a snapshot of the market from yesterday, October 24th. The S&P 500 and Dow Jones down slightly, 0.13% and 0.34% respectively. Not huge drops, but, what's the story there? What's the sentiment?
Well, I think it definitely suggests caution, especially considering the mixed economic signals we've been seeing lately. Almost like investors are just kind of tapping the brakes, waiting to see what happens next.
Right. But it wasn't all downhill, right? We had the Nasdaq, all those tech giants inching up actually by 0.17%.
Yeah.
And the Russell 2000, the smaller companies, also with a small gain, 0.087%.
Right, and that's where things get kind of interesting. Right, those gains in the Nasdaq and the Russell 2000 tell a different story. They point to continued optimism, especially when it comes to tech and those smaller growth-oriented companies.
Yeah, it does seem like tech is defying gravity these days. All our sources, they were practically bursting with enthusiasm about tech's staying power.
And there are some solid reasons for that, right? Think about it. Groundbreaking innovation happening at an incredible pace. A lot of key players are reporting strong earnings, and investors seem really confident about the long-term growth potential, especially in those areas like AI, cloud computing, cybersecurity.
Right. So if you're interested in tech, definitely a sector to watch. And speaking of things to watch, let's talk about, AI. It's everywhere these days. Is it all hype? Is there something more to it?
I think AI is definitely more than just a buzzword, especially when we're talking about the investment world. Companies that are effectively using AI in their operations, they're seeing some incredible results. Things like AI-powered algorithmic trading platforms, those are helping investors make, faster and more informed decisions. And we're also seeing AI being used for things like fraud detection, risk management in the financial sector, all boosting efficiency and security.
It's not just a shiny new toy, it's actually delivering. But let's be honest, not everything is sunshine and rainbows in the economic landscape, right? Our sources also pointed to some not-so-optimistic news, especially when it comes to manufacturing.
Yeah, definitely some headwinds out there. We've seen pressure on manufacturing, durable goods orders actually decreasing. It all points to a continued slump in that sector, which could have a ripple effect on that broader economic growth.
Yeah, it's almost like there's this underlying tension, right? Tech is booming, but the overall economic engine seems to be, sputtering a bit. How do we make sense of that?
Yeah, well, that's where things get a bit more complex. Let's take a company like Colgate-Palmolive, for example. They actually exceeded earnings expectations for the third quarter and even raised their outlook for the rest of the year.
Sounds like a recipe for success.
Right. But surprisingly, their stock actually dipped in pre-market trading. So what's going on there?
Yeah, what is going on there? That doesn't make sense.
It really illustrates how market sentiment, how investors feel about a stock or the market in general, can sometimes overshadow a company's actual performance. Even when the fundamentals look good, if investors are nervous about that bigger economic picture, it can, create a ripple effect and impact stock price.
So it's not always just about the numbers. It's about psychology, perception. Investors are human. They react to news and events in, unpredictable ways sometimes. Now, speaking of unpredictable, let's move to a market known for its wild swings, shall we?
Okay, let's do it.
Oil.
Oil, oh yeah, always a fascinating one, that's for sure.
It has such a massive impact, and lately we've seen some pretty significant price fluctuations, What's driving all that turbulence?
Well, you've got your usual suspects, right? Geopolitical tensions, always a factor.
Okay.
Anytime there's instability in major oil-producing regions, the market reacts, and sometimes pretty dramatically. We're also seeing those supply chain adjustments as the global economy continues to kind of recalibrate, post-pandemic.
Yeah.
And then, of course, there's OPEC, the Organization of the Petroleum Exporting Countries.
OPEC. Always got to keep an eye on OPEC.
Exactly. Their production decisions have a huge influence on those prices. And recently, they decided to, maintain their output cuts, which is definitely contributing to those price dynamics we're seeing.
So if you're invested in energy stocks, watching OPEC meetings, watching anything happening in those oil-producing regions, that's crucial.
For sure.
Now, buckle up, because we're entering a world that moves even faster.
Oh, boy.
Cryptocurrency.
Fasten your seatbelts.
And today's story comes from, the land of Ethereum. It's been hitting some choppy waters lately, plummeting to a 42-month low against Bitcoin. That's a pretty substantial drop. What's happening there?
Yeah, it's definitely a significant development, and it's sparked a lot of debate in that crypto community, right? Some people, they see it as a sign that Ethereum has hit, rock bottom, presenting that prime buying opportunity. Others think there's further to fall.
So is this a dip to buy or a sign of trouble? Some analysts are predicting a major comeback, suggesting that Ethereum could surge 25 to 50% against Bitcoin by 2025.
Those are some bold predictions for sure. They're based on those technical indicators, things like momentum, trading volume, which all suggest that buying pressure could be building. But we got to remember, the crypto market, it's inherently volatile. Predictions come with, well, a lot of uncertainty.
It's a gamble, but a potentially lucrative one. Makes you wonder, what are the underlying factors that might drive such a rebound? What are your thoughts on Ethereum's prospects?
Well, it's a fascinating situation to monitor, that's for sure. On the one hand, Ethereum, it has a lot going for it. Strong underlying technology, vibrant developer community, and it's a key player in that world of decentralized finance.
Right.
But on the other hand, that broader crypto market is facing some serious headwinds right now,
Yeah.
with regulatory uncertainty and macroeconomic concerns all weighing on investor sentiment.
So a classic risk-reward scenario. High potential gains, but also the possibility of, well, significant losses. Now, while we're in the crypto sphere, let's not forget about the universe of altcoins. Our sources mentioned a few examples: MBOX BTC, EarnBSD, even LinkABRL, just highlighting the variety.
Look at that, there's a ton out there.
It's almost overwhelming.
It really can feel that way.
Yeah.
Those altcoins, they represent the ever-expanding frontiers of the crypto world, right? Each one has its unique features,
Yeah.
potential, and they're often tied to specific projects or technologies within that crypto space. Some are focused on decentralized finance, DeFi, others linked to gaming, the metaverse, or even, tackling those real-world problems in innovative ways.
It's like choosing your players in the crypto game. Do you go with the established stars, Bitcoin and Ethereum? Or do you take a chance on those up-and-coming rookies?
And just like any good investment strategy, diversification is key, right? Not a good idea to put all your eggs in one basket, whether that basket is Bitcoin, a single altcoin, or any other asset class.
Speaking of diversification, let's bring it back to that bigger economic picture for a second. We talked about the slump in U.S. manufacturing, but what does that actually mean for investors trying to, well, navigate this complex landscape?
Well, a slowdown in manufacturing can really have a ripple effect across various industries. Companies that rely on manufacturing, for their supply chains, they might face some challenges, and we could see this impact everything from those industrial stocks, consumer goods companies, and beyond.
So it's not just about avoiding manufacturing stocks, it's about understanding how interconnected the economy truly is. A downturn in one area can potentially impact others.
Precisely. Savvy investors, they need to think holistically. They look at the overall economic landscape, consider various trends, and then make informed decisions about where to allocate their capital. They recognize that everything is connected.
Now, before we move on, got to touch on something that's been woven through our entire conversation today: the importance of staying informed. Markets moving at lightning speed, information overload. How can investors even keep up?
Well, that's where having the right tools and resources becomes absolutely critical. It's not just about having access to information. It's about having the ability to analyze that information, identify those trends, and filter out the noise. Like having a personal AI-powered research assistant.
Right. Imagine that. Your own AI research team working tirelessly to bring you those insights.
Exactly. Tools like EQAI can do just that. They help you analyze those balance sheets, assess risk, even identify potential investment opportunities that you might miss. It's all about empowering investors with the knowledge and insights to make, smarter decisions.
So whether you're a seasoned investor or just starting out, having access to those right tools can make a world of difference. It's not just about luck, it's about making those informed choices based on solid data and analysis. And in today's complex and ever-changing market, that's more important than ever.
Couldn't agree more. Welcome back to our deep dive.
We've covered quite a bit of ground already, haven't we?
We have, but there's still so much more to explore.
Let's rewind for a moment back to the oil market. We talked about those price swings. But what do they really mean for the average investor, someone like you or me?
Well, oil prices, they have this direct impact on energy stocks. When those prices go up, energy companies often see their profits rise, which can lead to higher stock valuation.
Right.
But when oil prices dip, energy stocks, well, they can feel the pinch.
It's a roller coaster ride for those invested in the energy sector, for sure.
It can be, yeah. But it's not just about those short-term ups and downs, There's a bigger story unfolding.
You're talking about that shift to renewables?
Exactly. While the oil market grapples with those geopolitical tensions and supply chain issues, there's this parallel story emerging, the rise of renewable energy.
So two energy worlds kind of colliding.
You could say that, yeah. And for investors who understand this dynamic, there could be some very interesting opportunities out there.
Right. Companies that can successfully navigate this transition to a more sustainable energy mix, they're probably well positioned for long-term growth.
Definitely something to watch.
Now let's zoom back to the world of crypto. We talked about Ethereum's recent struggles, but there's that whole universe of altcoins out there.
Oh yeah, it's a vast and ever-expanding universe.
Each one with its own story to tell. Our sources pointed to a couple of intriguing examples, MBO, XBTC, and LNEBRL. What makes these stand out?
Well, these altcoins, they often represent specific projects or technologies within that whole crypto ecosystem. Some might be focused on decentralized finance, DeFi, others on the metaverse, gaming, even solving real-world problems in, well, innovative ways. Investing in them is kind of like placing a bet on the success of those underlying projects.
It's like picking your players, right? Do you go for the established all-stars or take a chance on those promising rookies?
And just like any investment strategy, diversification is key. Putting all your eggs in one basket, whether it's Bitcoin or a single altcoin, that's usually not a good idea.
Right, makes sense. Now back to that economic picture for a moment. We talked about the slump in U.S. manufacturing, but let's break it down a bit further. What does this mean for investors across different sectors?
So imagine this, a slowdown in manufacturing can trigger this chain reaction. Companies that rely on a steady flow of manufactured goods, they might face some hurdles. We could see this impact industrial stocks, consumer goods companies. It all kind of trickles down.
It really highlights how interconnected everything is.
Exactly. A downturn in one area can create those ripples in others. Savvy investors, they understand this. They look at the big picture, consider the trends, and then make those informed decisions about where to put their money.
It's about understanding the whole board, not just one piece.
That's a great way to put it. Now let's touch on something that's been a recurring theme today. Staying informed. Markets move so fast, information overload everywhere. How do investors keep up?
It can be overwhelming for sure.
Absolutely. But that's where having the right tools and resources, that becomes crucial. It's not just about having access to information. It's about being able to actually analyze it, identify those trends, and filter out all that noise. It's like having, well, almost like having a personalized research team working for you.
I like the sound of that.
Right. Tools like EQAI, that's what they do. They can help you dig into those balance sheets, assess risk, and find those potential investment opportunities that you might otherwise miss.
It's about empowering investors with the knowledge to make better decisions.
Exactly. And that's a game changer, whether you're a seasoned investor or just starting out.
It's not about luck. It's about making those informed choices based on solid data. And in today's market, that's more important than ever.
And we're back for the final stretch of our deep dive.
We've covered a lot of ground today. We have. But what's the big picture? What should our listeners walk away with today?
Well, the market right now, it's complex. There are forces at play, pulling in different directions, creating both opportunities and, well, risks.
Like a tug of war almost.
Exactly. On one side, you've got the optimism, especially around tech innovation and those strong earnings we talked about. And on the other side, that sense of caution driven by economic indicators, like that manufacturing slowdown.
It's not a simple bull or bear market. It's more nuanced than that.
Absolutely. There's potential, but you need to know where to look and how to read the signs.
And that's why staying informed is so crucial. Can't just rely on gut feelings or those flashy headlines.
You need a deeper understanding of the trends, how different markets connect, and what's driving it all.
That's where tools like EQAI can be so valuable, cutting through the noise, making sense of the data.
Like having a personalized research team working for you. But even with the best tools, you need a strategy.
Diversification, right. Don't put all your eggs in one basket.
Exactly. And know your risk tolerance. What's comfortable for one person might be too risky for another.
And don't let fear or greed take over. Stay measured, do your research, and be prepared for those market ups and downs. They're inevitable.
They are. Now, with all that said, what's one area you will be watching closely in the coming weeks?
That's a good question. I'm really fascinated by that energy transition we talked about and how it's going to play out in the oil market. With those geopolitical events, supply chain dynamics, and that growing demand for renewables, it's a story that's still being written.
It's a great point. For me, I'm keeping a close eye on the evolving role of AI, not just in tech, but across the board. How will companies leverage it? Boost efficiency? Gain an edge? That's on my watch list for sure.
Excellent points. And for our listeners, remember, staying curious is key. The more you understand, the better equipped you'll be to reach those financial goals.
Absolutely. And if it ever feels overwhelming, well, tools like Equity AI are there to help.
We hope this deep dive has given you some valuable insights and a fresh perspective on today's market.
Thanks for joining us.
Until next time, happy investing, everyone.